Hey everybody, it's Mike from Orderflows, and in today's video I'll be talking about order flow imbalances, what causes them, how to see them in the order flow, their importance, and more importantly how to trade them, some trading strategies around them. And if you've been liking the videos I've been putting out, be sure to like and subscribe to the channel, so anytime we put a new video out, you'll be notified in your notifications, because sometimes it's a little hard to get found in the YouTube algo. So an order flow imbalance, order flow is about understanding the volumes that are being traded on the bid and the offer. And, just really quick, if you're looking at, say the market is 25 bid at 26, there's 32 contracts on the bid, 500 on the offer. Say, 400 lots traded against this 32. This 400 would be colored blue color, right? That would indicate a buying imbalance. If 32 contracts had traded on the bid, 400 on the offer, that is what you consider an imbalance. Now you could determine what ratio between the volume traded on the bid and the volume traded on the offer. So for example, if this was only, we'll call it a smaller volume, say only 40 contracts traded here, but 320 contracts traded on the bid, 40 against 320, you'd consider that a selling imbalance, right? And that would be colored red on the footprint. Now, generally most traders use about 4 to 1. I know some traders like to use 350%, which is a ratio of 3 to 3.5 to 1. I know some guys that like to use 1000%, which is a ratio of 10 to 1. But whatever you decide to use, stick with it. And form your analysis. You're not going to be going during the trading day and adjusting it. Okay, pretty much every order flow footprint software has the ability to look at imbalances. Show the imbalances on your chart. Now, me personally, I like to have the selling imbalances, right? The aggressive selling into the bid be colored red. I like the buying imbalances, the volumes that are traded on the offer because you have aggressive buyers lifting that offer, to be colored blue color. Right, because remember, sort of the universal standard for buying is green or blue for buy, red for sell. Simple, right? And so let's take a look, on the actual footprint. So this is what is this? We got a bond 5-minute chart. Okay, so you can see selling imbalances here, right? That's the red numbers inside the footprint. The blue numbers inside of the footprint, inside of the bar, are buying imbalances. And generally, when you have selling imbalances, you have more aggressive sellers. Generally speaking, the market is going to go down. Just as if you have aggressive buying, right? The blue numbers inside the bar, the buying imbalances, the market generally goes up. But that's not always the case because it's a little bit nuanced, and I'm going to get into that in a minute. Now, again, on the software that I have, I use 400, which is a ratio of 4 to 1. But again, you could adjust it. Say you want it to be, 2.5 to 1. So you would change the imbalance trigger to 250, which is 250%. And as a result, by lowering the threshold, so to speak, the imbalance trigger, you're going to have more imbalances appearing, right? Because now instead of looking at, a ratio of 4 to 1, you're looking at 2.5 to 1. So I'm seeing, a few more selling imbalances and a few more buying imbalances in these bars because I've lowered the threshold. If I went to a very high number, like a 10 to 1 or 1000%, there's going to be a lot less, right? Because now the threshold is set higher, right? So if I set it to 1000, right, which is a ratio of 10 to 1, there's going to be a lot fewer that are appearing, okay? See, there's very few. So let's just go back to my normal 4 to 1 ratio, 400%, really quick, and sort of go a little bit more in depth here. So again, like I said, generally when you have buying imbalances, you're going to be looking for them in green candles, right? Market is moving up. You're seeing the aggressive buying, as you see here. You've got 0 against 20, 0 against 60, 2 against 29, 34 against 218. Okay, you got 4 buying imbalances in this bar. It's a green candle. this red candle, you've actually got a stacked selling imbalance here. You've got one imbalance up near the top, 479 against 14. But down here, you got 189 against 29, 136 against 11, 159 against 2. Okay, so I know that as we're going into the low, we're seeing aggressive selling as we took out that low. Sometimes it's a stop that gets triggered, or just more sellers coming into the market. Now, there are going to be times, I'm sure someone will comment on here, well, Mike said, when you got buying imbalances, that means the market's going up. Why you got buying imbalances on the red candle and the market went down? Order flow is a scam. Well, no, you got to understand what is the reason why you have that buying imbalance or a selling imbalance. Again, on a red candle down, normally you expect to see the aggressive selling, which leaves, selling imbalances. But when you have buying imbalances on these red candles, right, now that's where it gets a little more nuanced. And what you're looking at is, basically this market, it hit the low, it's going sideways, and it's starting to go back up, right? You can see in here, you got a green candle. Then you get, a selling imbalance as you just sort of make this, I don't want to call it a little swing high, but it's just a little bit higher than you've been trading since 7:30. This is at just after 8. Aggressive selling coming in. Then you got a buying imbalance here, a buying imbalance here, right? And this is a red candle. Mike just said, I just said, right? Generally on red candles, you'd be looking for selling imbalances. Now, when you have a buying imbalance, what you actually have coming into the market is supply, okay? So because that supply is absorbing whatever aggressive buying is going on in there, it's still aggressive buying, but you have a passive seller up there, right? A limit order that is taking all the liquidity, they're providing liquidity rather, and they're absorbing all the aggressive trading that's coming into the market, right? When the market is 31 bid at even, they're offered there at even, and they're just happy to sell it at even, right? Market drops a little further down at 29, they're happy to sell it passively at 29. They're absorbing that aggressive buying. Once that aggressive buying is done at 00, the market drops a little further. There's still offers there at 31, at 30, at 29, and there's still some aggressive buying coming in, and it's absorbing it, right? But now the strong selling is kind of petered off. The bar closed actually here at 28. Then the next bar opens up, and you can see there's a strong bid there at 28, and it gets sold 781. Now it's a selling imbalance. Market keeps going down, another selling imbalance comes in here, then you got stacked selling imbalance. Now, that sort of leads us to, I'll talk about stacked selling imbalances, but, when you're seeing buying imbalances on red candles, right, candles that are closing lower than where those buying imbalances are, that's a sign of supply coming into the market. It's a sign of absorption. You have sellers that are absorbing the aggressive buying. And it's similar on the opposite side in terms of selling imbalances into green candles. Okay, so here we've got, just made a low right here at 130.08 and kind of going sideways. Now the market's starting to get bid up. And just before it pops up on this 5-minute bar, what led up to that is I see some strong passive buying here on the bid side, right? Passive bids are absorbing that aggressive selling. That's what's causing this selling imbalance, right? You still have strong selling, right? It's 689, but I've also got strong buying, right? I mean, it's not like they're selling into nobody, they're selling into passive buyers. So what I have here is the market essentially getting bid up, right? Buyers are stepping up to absorb whatever aggressive selling. Buyers are coming in saying, hey, you know what, this low, I want to support it, right? And they're bidding that market to absorb all the aggressive selling that's going on. And then right after that, you got this nice stacked buying imbalance. Now, again, this is a bond. This is a 5-minute chart. And honestly, you don't always get a lot of stacked buying imbalance. Now, what a stacked buying imbalance is or stacked selling imbalance is 3 or more imbalances neatly on top of each other, right? That's what you got, one stacked here, right? One on top of each other for 4 price levels. Here you got 3. Here you got 3. And generally, this is sort of a nice sign of strong aggressive buying or strong aggressive selling. It's aggressive selling if it's selling imbalances. Obviously, it's aggressive buying if it's buying imbalances. Now, where it gets a little bit more interesting, again, on a 5-minute chart, you don't really see a lot. And remember, one imbalance by itself probably doesn't mean much, right? Now, there are times where, like I said, it's a bit nuanced, and you got to sort of take a step further than just say, oh, there's an imbalance, and trade it, right? You want to sort of put the pieces together, do the analysis. Where is this buying imbalance coming in? Where is the selling imbalance coming in? If it's just a single one, right? If it's just a single one in a bar, sometimes it has no meaning. But if a market is going up like here, and I start seeing selling imbalances on these green candles, to me, that's a sign of buyers stepping up essentially to support this market from dropping further. Okay. Yes, I would like to see aggressive buying come in, with buying imbalances on a move up off the low, but it's just as important to see that strong bidding coming in. Just as if a market is starting to sell off, I like to see, supply coming in, leaving these buying imbalances on the red candles. And of course, I like to see further aggressive selling right after that, just as I like to see aggressive buying coming in after I see the supportive buying in terms of the selling imbalances. Okay, now this is a 5-minute chart. Now if you were to go down to say a 1-minute chart, this is where it gets a little bit more trickier, because on markets, especially like bonds, sometimes you don't get much price movement in a 1-minute bar, right? And let's just go back to the day session here this morning, take it from 8 o'clock. And, a lot of these bars, it's just trading, 2 or 3 price levels, sometimes 4. But what are you seeing? You're seeing, a bar's got a selling imbalance, next bar's got 1, next bar's got 1, next bar's got 1. Then you got one bar with, 2. Problem is, if you're trading a market that doesn't have much movement in bars, it's I don't want to say it's not as effective, because then you got to start stringing these bars together. But oftentimes you can get bars where you got both buying and selling imbalances in there. But where it gets, in my opinion, a little bit more powerful is if, you have these bars that trade, the bid and the offer maybe one tick above, one tick below, but you get the bar with a stacked selling imbalance or a stacked buying imbalance. That's a pretty strong sign, because it's telling you over that 1-minute period, there was sustained aggressive selling, right? Because remember, this is not a range-based chart. This is a time-based chart. And for it to have continuous selling for essentially 1 minute straight, or, strong aggressive buying, in terms of a stacked buying imbalance for 1 whole minute being sustained over that time period, is important. Because if this was just a range-based chart, someone could sweep right through, 3 price levels and you form another bar, instantly. But when I see something like this on a 1-minute bar, where I am not really expecting very many buying or selling, stacked buying and stacked selling imbalance. Again, I'm looking at a stacked buying or a stacked selling imbalance, looking for 3 or more selling imbalances stacked neatly on top of each other, or 3 or more stacked buying imbalances stacked neatly on top of each other. Okay, and a little bit later on the way back up, we got a nice stacked buying imbalance here. Market kept going up, another stacked buying imbalance right here. And what's interesting is, because when you have a stacked buying imbalance or a stacked selling imbalance, it's telling you that there was aggressive buying at those prices. And oftentimes the market can come back to that level. And I like to watch, what's going to happen when the market comes back to that level. So for example, right, we had the stacked selling imbalance back here at 816, around the 130.20 to 22 area. Market came back, and that is a resistance level. Now I do have a stacked buying imbalance going into resistance, if you will. So, I'm not sure if that resistance is going to hold, or just going to blow right through it. In this case, we blew right through it. But now we got a support level coming in, basically between 19 and 16. Market went up from this level 23 all the way up to whatever 29, came right back down to the support, and you can see how it's more or less holding for from like 902 all the way over here to about 915, and then it starts to slowly move back up. So stacked buying and stacked selling imbalances do give you opportunities to trade pullbacks or bounces back up, treat them as support or resistance for when the market comes back there, right? And don't just blindly buy it or sell it. I still think you have to watch the order flow, Because to be honest, if I have this resistance area and I've got very strong aggressive buying coming in, and sort of on the back of that I see some supportive buying coming in, I'm already thinking, oh, we can easily get past this area, rather than just sort of sitting back, say, oh, you know what, I got resistance, I'm just going to sell it. But if I'm looking at this move up, I can see the selling imbalance here, the selling imbalance here, these two selling imbalances. Okay, but it's a red candle, kind of expect that. But off this green candle here, I've got some aggressive buying on the way up, and then boom, right the bar that is going right up towards it, I got a stack buying imbalance. So I could feel pretty confident that this move's kind of strong. I've got not only the aggressive buying, but I got some supportive buying coming in as well. All right. So then, on the way back, we hit the swing high, start coming off, maybe some supply coming in here. I know I've got a support area here. And there's sellers in here. Honestly, I'm not going to deny that you've got sellers. I mean, you got these buying imbalances, the 203, the 124, the 275, the 89, and market is just sort of hanging around this area here at 23. It's not really getting past it very much, but at the same time, it's not really selling it. So what I can sort of surmise from this is that I do have passive sellers up here around this 23. Okay, can we move it back down into the support here or not? Or we're going to get past it. We get past it. You got the aggressive buying coming in, and we come up here to a new swing high at 29. And then I start seeing signs of supply coming into the market here, right? And aggressive selling coming in. And we come back down to our support area, and we're holding this support, right? It looks like, there's supply coming in, there's sellers, but what's happened? We're struggling to go lower. At the same time that you have these, you have aggressive sellers, obviously, but they're running into passive buyers. That's why you have selling imbalance pretty much in almost every bar here. You got selling imbalance here, here, and we're struggling to really get past that area. So I know that there's some support. There's some supportive buying in this market. So what do I have now? Earlier, well, okay, let me take a step back. Earlier, I had strong aggressive buying here, right? A stacked buying imbalance. Now the market is coming back to that area, and I'm seeing some strong passive buying. Okay, well, I know I had some strong aggressive buying earlier. Now I got strong passive buying. What do you think that means to the market? Well, that means there's support here in this market, because not only do you have passive buying, but you also had that aggressive buying earlier, which is what you like to see. And then you can see how the market is sort of holding that area, and then eventually starts trading back up to that 29, sort of that swing high from earlier. So that's one way to use imbalances. Again, there's different ways you could use them. I mean, the market's a little bit nuanced, again, depending on the market. Some markets, you're going to see a bit more imbalances. And one thing, depending on the market you're trading, you may want to use a minimum volume for the imbalance. My Orderflows software, it allows you to put in a minimum. I use 10, right? You can see minimum imbalance volume of 10 here. And what that means is there's got to be at least 10 contracts on the imbalance, meaning even though I'm using 4-to-1, if I have 1 against 5, technically that's an imbalance of over 4-to-1, but doesn't meet the minimum volume requirement. 0 against 4 technically is an imbalance, right? Nothing traded on the bid, 4 traded on the offer, but it doesn't meet the minimum volume requirement. And and that would matter, in some of the thinner markets, especially markets that trade, I'll say trade a lot of thin volumes, but sometimes at price levels, you don't get a lot of volume going through because the market is a little bit more volatile, right? It's moving around, and it can skip, certain price levels, right? Like in, here, this is Russell, okay? You can see a lot of zeros in here. So, 1 against 8 is an imbalance. Again, 1 versus 8, etc. 0 against 4, 0 against 4. And when you get the idea, it's not showing these as imbalances because they don't meet the minimum requirement, right? You don't want to be looking at a lot of imbalances when it's just a market that's not as liquid. So by setting a minimum volume of 10, in my opinion, it just helps to clean it up and make it more understandable and readable. If I were to, change it to, a lower number, I'll just show you, change it from 10 to 4, click apply. There's going to be more imbalances, right? But it's not about having more. It's about, understanding really what's going on in the market. I'm not really concerned. Yeah, I've got imbalances here: 0 against 4, 0 against 4, 1 against 4, 1 against 4. But that's not really helping me, right? You want to be looking for imbalances on solid volume. I don't want to say a lot of volume, but solid volumes. Okay. So again, I hope this clears it up for you guys. But again, be sure to, if you got any concerns or questions, just put them in the comments. I do get around to answering some of the comments. And sometimes, I've been making videos as replies to some of the comments. So again, be sure to like and subscribe to the channel so you'll be notified whenever I post a new video. And again, thanks for watching. Bye-bye.